Hello and welcome to another awesome episode of the Growthvisory. As always, I am your host, Jim Crimella, and today I am super excited to have with me an amazing tech genius that's going to talk to us. You didn't know I was going to say that, did you? I love surprising the guests. But I'm so excited to have Brian Vieaux on with us from FinLocker today. He is going to teach us all about FinLocker, what it is, why we need it, and how special it truly is for the marketplace. So Brian, welcome to the show.
Yeah, Jim, thanks for having me on. I don't know about that tech genius comment, but I'll strive to get about halfway there today.
There we go. You know what my mom always said, fake it till you make it.
Yeah. Right
We'll
on.
do our best. So why don't you tell us, what is FinLocker and why is it so cool?
Yeah, so Jim, FinLocker is we're a B2B2C business. Today we're in the housing finance vertical. So think of mortgage companies, banks, credit unions, mortgage brokers as our kind of target client. So we work with those institutions, and typically we work with the company at an enterprise level to deploy our technology, which includes some white label and branding, which I know you're a marketing guy, so you'll probably dig some of the stuff we do there. But then we sell, a layer deeper into the loan officer channel, and loan officers are who face off with consumers when it comes time to get a loan. And so our business is really driven by the loan officer introducing our technology or their version of our technology to their sphere of influence, their database, their prospects and clients. So that's kind of the business. And then what we do from a product perspective, we help empower loan officers to educate, engage, nurture, and convert early journey first-time homebuyers. And so if we put our hat on and think of the first time we bought a home, we didn't just wake up on a Saturday morning and say, I'm going to go buy a house today.
Oh, that's not what you did?
No, it may have been, now that I look back. Most home buyers of any kind, whether they're first time or buying their second, third, or fourth home, go through this process of financial and emotional readiness. And so what we've built is the technology side of helping with financial readiness, which frankly spills into emotional readiness. And so loan officers use our product to build a top of funnel strategy to bring in early journey home buyers and then build trust through that education, preparation, and confidence building process, leveraging the tools of our technology. That's kind of the nuts and bolts of it.
Okay. Well, you got my curiosity piqued on what are the nuts and bolts look like. So is it like an education piece for these folks that are renters and they're looking to get into the home purchasing market? How do they, or I guess how effectively can an LO leverage what you guys are offering into their regular sphere of business, whether they're out networking with real estate agents or they're out pounding the pavement or just working really their initial sphere of people that they know?
Yeah. So I'll start by maybe naming a few consumer facing financial apps that we all are familiar with. Probably many of us use them, right? So there used to be Mint.com. They were kind of retired Mint.com and rolled it up under Credit Karma. But you have that Mint.com feature set of personal finance, budgeting, goal setting.
Okay.
Credit Karma, Credit Sesame are very focused on credit awareness, credit education, credit improvement. Rocket Money is one of the newer kind of entries into personal finance. And Rocket Money is, basically a tool to help people identify recurring monthly subscription payments. And then if that makes sense, helping them cancel those. And then they have some budgeting experience there. And then most of us probably are familiar with Zillow and Redfin. These are sites and apps that we go and look up dream homes, right?
Right.
What we've built at FinLocker is this combination of all of those tools that I just described, but we do it in one platform, in one ecosystem.
Okay.
And what's unique about what we do is on top of those tools that I just described, or if you go a layer down, actually, in each of those tools, there's a set of data that each of those tools is connected to, whether it's my credit data as a consumer, whether it's my data from my checking accounts, my credit cards, where I spend money. We provide the consumer the ability to connect directly to their employment payroll data. And then, of course, if they're searching for real estate or if they already own a home, they can connect that experience. And so that the layer of data that I described, on top of that, we built very specific journeys and experiences that are experiential, education/experiential for someone that's prepping to buy a home. And so we're essentially assessing a prospective home buyer on 4 dimensions perpetually: assets, how much money have you saved for your
Right.
target down payment, income and employment, credit, and then finally we used all those data sources, including that income, that employment income, and we calculate a debt to income ratio.
Okay.
So for those, watching and listening that aren't in housing finance, it's basically the percentage of your total monthly payment for your home, your new home, relative to your total monthly income, debt to
Right. Right.
income ratio. And so those four assessments that are perpetually happening are essentially what goes into somebody getting approved ultimately for a mortgage. And so what we do is we build this confidence experience around
Nice.
those four dimensions. So if
Okay.
you're 6, 12, 18 months even from thinking about buying a home, and you've started to use our tool set through a loan officer that invited you in, you will be building confidence with certainty because we're using your direct source data.
Right. Right.
And so that when it comes time to buy and apply, you could be reasonably assured as a consumer that because you partnered with a loan officer that is a, educator first mindset loan officer who
Yep.
has modern technology, you're going to feel good about, buying and applying for a financing to support that property acquisition.
That's a really cool piece of software you guys got. And you're saying you're not tech geniuses. I mean, maybe you not specifically, but FinLocker seems like some pretty cool tech.
Yeah, it's very cool. Like I think I mentioned, it's a modern consumer finance experience, but it's very journey and output focused. And so in this case, the outcome that we're trying to help achieve is home ownership
Right.
for that next generation of home.
Okay. Very, very cool. So how long have you guys been really on, like, I know there's a foundational phase, but
Yeah.
from trying to grow and gain market share, how many years have you guys been trying to gain market share?
So like what I just described, call it the current state of the product, it's about an 18-month-old product in
Okay.
an otherwise 6.5-year-old company.
Nice.
So, it's not fair to say we've been at this for 6.5, 7 years in this current state with this product. We've been growing, for the last 18 months.
Nice. Very cool. Very cool. Oh, 2024 had, I'm assuming, some pretty decent growth. And then, as every business in growth mode, we're trying to beat what we did last year. So
Yeah.
what kind of goals have you guys set from a growth standpoint from 2024? Where would you like to be at by the end of 25?
Yeah. So we look at things in kind of multiple dimensions, right? Revenue, every business, that's the fuel
For sure.
that runs the business. So, our growth from a revenue perspective year over year, think of, 20 to 30% year over year growth. And the good news for us is a lot of our revenue is licensed, kind of recurring ARR type revenue,
Nice.
but there are times when that changes at a client level. So revenue's revenue. But where we really where we really focused our energy, if you will, is on that individual salesperson, that loan
Hmm.
officer persona within, our client, our enterprise client. So I like to say that we have to sell once to the enterprise, and then we have to sell a second time down to the individual loan officer.
Right.
And so we have a goal. We have a goal to, basically double the number of enterprise clients
Okay.
at the end of 2025 that we had it as we exited 2024. Q1 is wrapping up as we record here
It is.
today,
It is.
and happy to say that we're on plan in terms of the
Nice.
number of new enterprises added, and we have a really healthy pipeline of additional enterprises. And then go a layer deeper, it's those individual users of our tech, the loan officers. And this is where it gets pretty wild because we have really aggressive goal strategy to, almost 30x the number of loan officers at year end 25 that were on our platform at year end
That's a
24.
small goal.
Yeah. And we're a small little, we're 26, 27, 28 people in our company with
Okay.
over half of our staff focused on product, design
Yeah,
and
I kind of figured
development.
that one.
And less than half of us kind of focused on growing the business from a client acquisition perspective.
Gotcha. Okay. So you kind of have, from a growth strategy standpoint, then sort of multi-pronged. You split some attention on getting more enterprise, that side of the business. And then I'm assuming then by extension, you would have like an LO training, LO sales, like you said, that 2-stage.
Yep.
But then do you also have a separate strategy that's going direct to the LO stage? Or is it
Yes.
really, okay, so
Yeah,
you are combining the two.
I'm glad you reminded me of that, because that's a big part of that growth number in LOs is really going to the LO universe at large, not just
Right.
the LOs within our enterprise. And there's some cool things that happen when when you do that. We're kind of doing a top down and a bottoms up approach to the
Yeah.
market,
And meet
right?
me in the middle.
Yeah. And so
Nice.
we're starting to see, I'm a good to great, guy. So the flywheel effect, the wheel it's moving for us. And I'm excited about the next 90 days, because I think we're going to start to see that wheel actually start to make a rotation on its own. Right now, we're
Nice.
really having to
Get that
manually
momentum.
push it around.
Okay. All right. So I'm going to ask, so how do you actually do that? Like, what strategies are you deploying to gain either both enterprise and then the individual LO? Because, from a marketing and sales guy,
Yeah.
my brain goes, ooh, I can do all of these things, right? And then my
Yeah.
resources guy's like, we can't do this and this. I'm like, so how do you, like, what have you picked and chosen to really focus on for the growth?
Yeah. So again, I'll reiterate, I'll probably say this a bunch of times. We're a lean and mean shop. We're,
For sure.
still, we've graduated from startup, but we're in scale up, but we're still we still operate very much like a bootstrap startup. And so
Right.
what we do is I do this. I get on as many platforms as possible, as often as I can. And I like to say that I'm kind of creating this air cover
Yep.
awareness strategy. And so I'm very active on LinkedIn as a platform, getting more active on some of the other socials like Instagram and Facebook, because that's where loan officers tend to hang out, so to
I
speak.
wouldn't ignore TikTok.
Yeah, I'm probably not going to get there. I'll repurpose some content and push it
Yeah,
out there.
what I'm finding with my business is a lot of the times the stuff that works well on Instagram will just pour over to TikTok
Yeah.
just fine.
Yeah. So for me, it's about, my LinkedIn profile, my LinkedIn network is the strongest of all those
For
platforms.
sure.
And so I try to lean in to where the strength is, but
Okay.
it's starting to spill over, into the other platforms. But regardless of the platform, because I think it's applicable to anybody that's in this kind of mode where you're trying to bootstrap it, at the end of the day, nobody knows your business, your product, your mission, your passion better than you, whether
Yep.
you're a founder or you're in charge of growth or whatever the role is. And so, I think it for me, the highest and best use of my network, my experience, and my passion for what we do is to just talk about it as often as I can and in as many places as I can, and that
Gotcha.
helps build awareness. I have my own podcast where I bring people on and talk about cool things about what they're doing, and that just helps
Uh-huh.
kind of build that awareness even indirectly on all things FinLocker. I go out and do as many industry events where loan officers are congregating as possible, and where it makes sense, get on stage and talk about things that are important to loan officers. And so I think, again, separate, forget the business I'm in. If you're selling to an entity and you want to build awareness about your product, you got to start. It's the old adage, people do business with people that they know, like, and trust. And so, I'm in that. A lot of people know me. I don't know how many people like or trust me yet, but I'm hoping that that's starting to grow. And then what's happened is my personal brand, if you will, has really just become synonymous with FinLocker. And
Right.
so when I'm on a stage talking to loan officers about the importance of early journey, up funnel education and engagement of first time home buyers, they're smart enough to connect the dots that I know a little bit about it, but I also might have some solutions that they should look at that would help do that.
Right. Okay. Fantastic. Have you guys ever looked at leveraging other media sources, like lower budget but advertising, to help promote that top end of your funnel to get more conversation started?
We have, it's a little challenging in that the cohort that we go after, this loan officer cohort, there's not a single place where where their eyeballs go. So you just kind of have to be in as many places as possible. And then the other thing that I've found, and this is, it presents challenges when we talk to some of the media type folks in our industry about, spending some dollars. Like last week, as an example, I did a LinkedIn live event where I demoed our product.
Mhm.
And that event has had over 650 individual unique viewers of that on-demand event on LinkedIn, right? And so if I was going to go, spend $5,000, $10,000 to advertise or market or even do a demo somewhere, at a minimum, that's I would expect to have the same number of eyeballs, and
Right.
it's not as easy to kind of quantify that. So, and I think we might be a little unique because I do have a decent following on LinkedIn that does get, a fair amount of visibility. And so we haven't done a lot of traditional marketing and advertising. What we do and what we have done and what we will continue to do is partner with media resources within our industry to create thought leadership content, whether it's podcasts, papers, et cetera, and try to use that as more of a vehicle for awareness building.
Okay. Fair enough. Fair enough. So seems like the future's bright. Seems like the plan is in place, and you telling me it's working because you're on plan of what your targets are for your growth goals. But we all know as business owners that it's not always sunshine and rainbows, right?
Yeah.
Sometimes that there are challenges that we face, and a lot of us that are crazy that are in this business or in any business, you kind of look forward to the challenges because it's fun to overcome, as long as you're not constant. Like
Right.
if it's just one giant challenge, it's not as much fun. But it's a puzzle to be solved is why I like doing different businesses. So what kind of challenges are you guys facing now to make sure you stay on target and continue that growth curve, which, the LO goal is incredibly aggressive. Revenue goal is more in line with like a standard operating business model. So what kind of challenges are you guys facing right now?
Yeah. So I'll rewind the clock a little bit. Prior to this version of our product kind of coming to market, we had started to get some traction with kind of V1 of our product. And then this thing called COVID came to be.
What was that? That was
What
a
was that?
thing.
It's like,
I forget what it was. It was a
we're like,
thing.
what, 5 years removed from that or something like that?
Yes,
And so, everyone was impacted by the pandemic and the closure. That
for sure.
we're not asking for, anyone to feel particularly sorry for us, but because we sell into this cohort, this vertical mortgage finance, if we think about what was the immediate result of the pandemic in housing finance, it was artificially low interest rates. And I will say they were artificially low, which fueled this massive refinance boom in the industry. And so two things went against us. One was there was less need for a lead nurture product because as an originator, I had more
Business and you know what to
deals
do
coming
with.
in than I could handle.
Yeah.
I needed capacity to handle the business that was coming in, not more business. So that was
Right.
going against us. And then secondly, and really it's the same side of the coin, just getting the attention of the industry when they were just swamped with business. So we went heads down and just said, okay, it is what it is. We can't control that market, but let's just go heads down and just continue to work on continue to solve for this problem that we believe is out there, which is helping educate and engage these early journey home buyers. So we just put all of our energy into product design and just continue to build the features that we knew would be helpful. And so on the other end of that pandemic was rates kind of went the other way rapidly and
Right. And
almost like
artificially
stalled out the engine completely.
retraced.
Right. So today, our biggest challenge is I'll call it technology fatigue at the
Yep.
loan officer level. There's all kinds of shiny tools out there that they have access to, and so we're trying to stand out, right? And in some cases take share from some other. We don't really have a competitor, but our competitor is the tech stack of a loan officer,
Gotcha.
and they can't just keep adding tech
Right.
because
Right.
it comes with a cost. And so at some point they do have to make decisions on which piece of tech is going to be better than something else. And so our challenge right now is to make sure we're positioning ourselves as a tool that's not just a nice to have, not just a shiny object, but truly a tool that is going to move the needle for loan officers in business development and revenue growth. And so how we're doing that is just stacking value, right? So
Okay.
that big growth number for loan officers, it is big for a reason because we're creating more value in our product and we're not necessarily charging more. We're just stacking value so that it
Right.
gets harder for an L, to say no. It's like, no, at some point they're just like, I have to do this just out of being a good business person because there's so much value here for what that subscription fee looks like.
Gotcha. Awesome. That's a good answer. That's a good solution to the problem. It's like you just keep grinding away at it and keep offering the exact best thing you can. And I know that the mortgage industry sure could use that next turn, So I have a feeling that some additional relief. I get updates on rates like twice or three times a week, and I just saw rates cut a little bit of a dip. So
Yeah.
all good signs. All
Yeah,
good
yeah,
signs
yeah.
there for that. Brian, if we've got LOs watching this,
Yep.
which we do, and they are interested in finding out more about FinLocker, what's the best place for them to go for?
So there's two places where I would say to go. I talked about LinkedIn already. It's my CRM. Honestly, I live in my LinkedIn
Gotcha.
profile. So follow me on LinkedIn. That's one place you can go. I've stood up 2 pages under my profile. One is for FinLocker, the business, and then there's a Key Steps, KEY steps, Key Steps, powered by FinLocker. Key Steps is our non-enterprise version of our product for any loan officer out there. And so that's really where we point all loan officers to, because we put a bunch of content on that Key Steps LinkedIn page, education content, video, information about, how to get a demo and all that good stuff. So I would say either come to my FinLocker page, DM me, or follow myself and our Key Steps page on LinkedIn, or you can go old school and go to finlocker.com and learn all about it and set up a demo there as well.
Awesome. Thank you. Thank you. So if you want to find out more, Brian Vieaux, VIEAUX, will get you on LinkedIn and get connected with him, because I really do think that, as he says, the value stack is incredible. So take advantage of that. And Brian, I want to thank you for being on. You've been a fantastic guest. It's been great getting to know your business a little bit. I truly believe that you guys are going to revolutionize it. Stay grinding. And thank you so much for being on the show.
Jim, thanks for having me, man. Appreciate it.
Absolutely. You take care. And we'll catch you on the next episode of the Growthvisory. Thanks for watching, everybody.